As the power struggle continues in Canberra, the big miners are showing no intention of keeping quiet. Flush with the lobbying success over Labor's resource rent tax, Rio Tinto now has its sights on climate change. Rio's boss, Tom Albanese, told a business lunch in Brisbane today that the mining sector should be part of any policy discussions. Here's Philip Lasker.
These days, when mining executives speak, people listen and governments quake.
I'd like to thank all of you for such a warm welcome and such a large crowd. I think this is the largest lunch or dinner engagement I've ever given.
The Rio chief told the assembled masses that the mining tax debate made Australians more aware of the contribution mining companies make to this country.
It's also highlighted the crucial needs for constructive discussions between the mining industry and government with a focus on interests for all Australians who need to feel that they're receiving a fair share of the benefits.
Those discussions haven't been so constructive for Fortescue Metals chief Andrew Forrest, who still feels the government stands to get more than its fair share. With Australia's political future in limbo, Mr Forrest passed up an opportunity to launch another public attack at his profit announcement. He left his chief financial officer to field questions about reports that 3 independent MPs favour a mining tax.
We'll continue to monitor the Australian political situation as it evolves. There's a lot of matters up in the air and a lot of matters being discussed, and we'll be watching closely as those matters are resolved.
Watching closely isn't enough for Tom Albanese, particularly when it comes to the global issues of mining taxes and climate change policies.
As an industry, miners will have to be part of the constructive role being played in the policy debate, and we can't just settle for complaining about legislators having a short-term view of politics. We've got to be thinking, and we've got to be here for the long term, and we need to step up and address big issues within our industry.
The long term looked brighter for Fortescue Metals as cash flow gathered momentum. Profit for the year to June was $654 million, up 14%. Cash flow of more than $1.2 billion was 134% up. Total iron ore shipments jumped 44% and ore prices rose 17%.
Cash flow has continued to remain strong subsequent to year end, and at current prices we expect to earn healthy margins, which in turn should see our cash position build.
The market liked it. Fortescue shares finished 16 cents or 3.5% higher at $4.50.
The operations are maturing, the costs were relatively steady, and Fortescue was able to take advantage of higher prices with the new market pricing system, as flagged by BHP also in their result yesterday.
That result didn't do much for BHP Billiton in Australian trading today. The stock edged 5 cents lower to a 1-month low of $37.39.